Hi, Jonathan York, Bay Financial Partners, looking at the investment markets. Another very big week for the US markets and hence global markets. We've got the Federal Reserve meeting there, expected to cut interest rates by 25 basis points, and that is despite a slightly stronger reading on the CPI that was released last week. Now, despite the government being shut down, the CPI was released and it came out at 3%, which was a tenth better than was expected at 3.1. So the markets took a little bit of heart from that, and also as well, because you've got a very weak employment situation in the US currently, although obviously that data isn't being released because of the government shutdown. But if you look at the recent sort of data on the employment side, it's running around sort of 18 to 20,000 jobs being created. That's well down from the sort of 110, 120 odd thousand jobs that were being created 2 or 3 months ago. So certainly the weak employment side, I think will leave the Fed with really no option but to cut interest rates because they are worried about the US economy sort of slowing down and potentially sort of slipping into a recession. But if you look at the CPI, that 3% figure, although it's slightly better than was anticipated, it's still well above the Fed's target of 2%. So potentially, despite sort of Stephen Merrin, calling for big interest rate cuts, it's hard to see the Fed cutting aggressively going forward. Now that inflation print is obviously in stark contrast to Donald Trump and his administration that claims that there is no inflation in the US. Now, indeed, there is hope that at the APEC summit this week, Trump will get together with Xi Jinping and will hope to sort of nail out a trade agreement with China. Although it's quite interesting on the recent data coming out of China, China seems to be doing pretty well despite the sort of ongoing trade spat with the US. Obviously, the tariff's still a big story in the US, and it's quite interesting because potentially Trump is now looking at using some of the so-called tariff money to help sort of bail out the farmers that are struggling. While all the time that China has almost sort of ceased purchases of US soybeans and has now taken those from Argentina, which Trump again has looked at sort of bailing out and helping out. And all the time we've still got the government shutdown and really showing no signs of coming to an end to that shutdown, which with the lack of congressional oversight is really allowing Trump to do pretty much whatever he wants. So rates in the US are pretty much baked in that 25 basis point cut from the Fed. The 10-year is 398, the 2-year is 345, and that 30-year is just hovering above 450 at 457. Also got a big week for earnings in the US. We got a lot of the big techs reporting this week. We got Alphabet, Amazon, Apple, Meta, and Microsoft. Now, it would appear that Trump has sort of finally run out of patience with Putin and has issued a fresh round of sanctions on the Russian oil companies. So it will be interesting to see how that plays out. Because at present it looks a long way from finding any sort of peaceful solution to the Russian-Ukraine war. Now oil has just spiked back above $60, currently trading 60.20 and change. Now in the UK, it really is all eyes on the budget to see what they can come up with, because certainly the UK is in really pretty much a big sort of mess. You've got a sort of a big funding shortfall. You've got potentially taxes needed to rise, but also you've got a very weak economy, rising unemployment, but also you've got rising inflation as well. Now in the EU region, just waiting to see what the next sort of steps are in the sort of Russia-Ukraine war. Now in Australia, we've got the RBA meeting next week. It'll be interesting to see if they do cut interest rates. Potentially there's a 25 basis point cut on the table. Now here in New Zealand, starting to see a bit of a pickup in the housing market after the recent rate cuts. Also starting to see a few more job adverts as well, which is all boding pretty well for sort of a little bit more optimism coming into the New Zealand economy. Because certainly, as discussed here before, you've got dairy and horticulture doing pretty well, but the rest of the economy really has been pretty soft. But if we start to see a little bit more optimism coming through in those other sort of sectors, then potentially there are some reasonable signs out there for growth going forward over the next sort of 6 to 9 months. And potentially we're still looking at a further rate cut at the November meeting. Now, as we're just almost 12 months away from the next election here in New Zealand as well, Labor have fired the first sort of salvo in terms of sort of political stances and issued its a tax policy, which is a targeted capital gains tax. But they sort of sweetened that by saying that the money that raised from that will be used to sort of help the healthcare sector. So it will just be very interesting to see on the next sort of round of polls, how that sort of goes down with the New Zealand public. So if you are looking for income options, go to the website www.bayfinancialpartners.co.nz for lots of interesting articles. I'm looking forward to speaking to you soon.